Okay, let's dive in. So picture this. A company, its entire future pretty much riding on one single drug.
Mm-hmm.
And get this, the drug belongs to a class that's, well, seen a lot of big failures in the past.
Yeah, that history is absolutely crucial context here. It really raises the stakes.
Exactly. We're talking about NewAmsterdam Pharma today, ticker NAMSS. It's a real high-wire act.
It is.
Mhm.
And understanding their specific strategy, how they plan to succeed where others haven't, that's fascinating. And the hurdles are significant.
Right. So you gave us a whole load of material financials, SEC filings, press releases, analyst reports, the works, really digging into their clinical stuff and the industry.
Yep.
Our job here in this deep dive is to kind of sift through all that, pull out the really important bits, and help you get up to speed fast on what actually matters with NAMs and their main drug, obicetrapib.
We'll guide you through it, point out those critical pieces, the things that could really swing the outcome for a company at this stage.
And hey, if you find this kind of focused analysis useful, especially on stocks you're watching, just a reminder, you can become a member of Stock Analytics AI. It's pretty cheap, Euro 4.99 a month.
And members get to suggest tickers for these deep dives, and we prioritize them, especially around things like earnings.
Yeah, definitely check out the links in the description if that sounds good.
So as we go through the science, the money side, the market buzz, we're also going to uncover a specific risk mentioned in these sources. It's not about the clinical trials themselves, actually.
Whoa, interesting.
Yeah, it's more about global trade, and it could really hit New Amsterdam's bottom line, especially in the U.S. market, which is, obviously critical.
Okay, that definitely sounds like something to stick around for. A bit of a curveball, maybe.
Could be. We'll get to it.
All right. But first things first, let's get a proper handle on the company itself. What is NewAmsterdam Pharma fundamentally trying to achieve?
Okay, so based on the sources, they're a late-stage clinical biotech. Their whole focus is cardiovascular disease, specifically lipid disorders, think cholesterol problems.
Mm-hmm.
Their main aim is developing therapies for patients whose LDL-C, that's the quote-unquote bad cholesterol, isn't controlled well enough by the drugs they're already on.
So filling a gap, basically, an unmet need.
Exactly. That unmet need is key. It's a big patient group out there still struggling.
Okay, developing drugs. Makes sense. But are they actually selling anything yet? Any product revenue coming in?
No, not from product sales. The sources are really clear on this. They are pre-revenue from a commercial standpoint.
Right.
That $3 million in Q1 2025 revenue you might see, that came from a licensing deal they struck with Menarini Group. It's tied to R&D work, not selling the actual drug.
Gotcha. So any future sales, any actual money from their drug totally depends on getting it approved and then selling it successfully.
100%. The whole investment case hangs on future regulatory wins and commercial success.
Okay, which brings us squarely to this drug, obicetrapib. Why is this one compound so vital for them?
Obicetrapib is, it's everything for them right now. It's described as an oral, low-dose, once-a-day CETP inhibitor.
CETP inhibitor. Okay, what does that mean exactly?
So CETP is a protein involved in how your body handles cholesterol. This drug inhibits or blocks that protein. The oral, low-dose, once-daily part is all about convenience for patients.
Right, like taking a pill instead of maybe needing an injection.
Exactly. That's a potential advantage over some other newer injectable cholesterol drugs. And they're testing it two ways, by itself as a monotherapy, and also combined with another common cholesterol drug, ezetimibe, in one pill.
Ah, the combo approach. Could reach more patients that way, maybe?
That's the idea. Broader reach, maybe even better results for some.
And getting it approved means clinical trials, lots of them, based on the sources.
Yeah, they've been busy. They finished several phase 3 trials. Those are the big ones for efficacy and safety, named Broadway, Tandem, and Brooklyn.
Okay.
Those mainly looked at how well the drug lowers that LDL-C number, and the data from those. They've announced it, and importantly, publish it in top medical journals, New England Journal of Medicine, The Lancet.
Wow, okay. Publishing there is a big deal, right? Adds credibility.
Huge deal. It means the data has been peer-reviewed, scrutinized by experts. It lends real scientific weight.
But there's one trial that seems like the main event, the one everyone's really watching. Prevail, why is that one so absolutely critical?
Prevail is the linchpin. It's a massive phase 3 cardiovascular outcomes trial, a CVOT.
CVOT.
So this isn't just about did the cholesterol number go down.
Yeah.
A CVOT is designed to show if the drug actually reduces major cardiovascular events, think heart attacks, strokes, death, real-world impact.
I see. That's the ultimate proof.
It's the gold standard. They enrolled over 9,500 high-risk patients, finished enrollment by April 2024, and it's still ongoing. Getting positive data from PREVAIL showing it prevents those events is absolutely essential for getting approved and convincing doctors to use it, especially because of the history of this drug class.
Right, you mentioned that history. The other CETP inhibitors, they didn't fare so well, did they?
No, not at all. And this is a huge shadow hanging over NAMS. The sources detail this really challenging past. Big names Pfizer, Roche, Lilly, Merck, they all had CETP inhibitors that failed late stage.
Failed how? Safety? Or just didn't work?
Bit of both. Some had safety problems, others just didn't show a strong enough benefit in reducing those cardiovascular events, even if they lowered cholesterol numbers. Merck's obicetrapib showed a small benefit, but they still pulled the plug.
So there's a lot of skepticism out there.
Exactly. Built-in skepticism, and MS has to knock it out of the park with their data, especially PREVAIL, to overcome that history.
Okay, so what about those other trials mentioned, Rembrandt and Vincent? Are they also about tackling that history or showing something extra?
Precisely. They're designed to differentiate obicetrapib, show benefits beyond just LDL-C lowering. Rembrandt uses imaging to see if it actually reduces plaque buildup in arteries.
Okay, looking inside the arteries.
Yeah, and Vincent looks specifically at lipoprotein A, or LPA. That's another tricky cardiovascular risk factor that's hard to treat.
So trying to build a broader case for the drug.
Right. If those studies are positive, it helps argue that obicetrapib isn't just another LDL drug. Maybe it'd have these extra benefits, making it stand out more.
Okay, so pre-commercial, focused on this one drug. How's the market viewing them right now? What kind of size are we talking?
Well, since they're pre-revenue, their size is really their market cap. Early June 2025, it was sitting around $2.26 billion.
Wow, over $2 billion with no sales.
Exactly. That tells you the market is pricing in some serious future success. There's a lot of anticipation baked into that number. And compare that to their cash, they had a strong $808.5 million in Q1 2025.
So a big chunk of that market value is purely based on hope for the pipeline.
Absolutely. It's the perceived potential of obicetrapib driving that valuation. Huge pressure to deliver on that potential.
What's the core pitch then? What are they telling doctors and patients is the main benefit?
The core value proposition, laid out in the sources, is basically an effective and convenient way to lower LDL-C, especially for high-risk folks who aren't getting there with current meds.
The convenience factor, again, the oral pill.
Yeah, that oral once-daily aspect is a key differentiator against injectables. Plus, they hope trials like Rembrandt and Vincent will show those broader benefits. And critically, they need to prove it's safe and effective where the others in this class stumbled.
Let's zoom out a bit to the industry. The cardiovascular market itself, it's massive, isn't it?
Huge. And it's not going away. While the sources mention growth in related areas like medical devices, the big driver for a company like NAMS is that ongoing unmet need for better LDL-C control.
Especially for people who maybe can't take statins or don't get enough benefit.
Exactly. Statin intolerance or just needing more lowering power. Plus, aging populations globally mean more cardiovascular issues overall. Demand is strong.
And the competition. It's not just the ghosts of failed CETP drugs.
Oh, definitely not. Yeah. The competitive landscape is fierce. They're up against the standard stuff like statins, the ezetimibe. Then you've got the newer injectable PCSK9 inhibitors, other oral options like bempedoic acid, and even things like inclisiran, which is injected but only like twice a year.
Wow, okay. Lots of options.
Yeah. So NAMS needs to show obicetrapib offers real advantages, efficacy, safety, convenience, maybe those extra benefits to carve out a space. It's not just about beating the CETP history, it's about competing today.
And getting approval sounds extra tough, given that CETP history.
You bet. The whole drug approval process is rigorous anyway. Phase 1, 2, 3, then deep dives by the FDA in the US, EMA in Europe. But because of those past CETP failures, regulators are going to be looking at NewAmsterdam's data, especially PREVAIL safety and efficacy, with a magnifying glass.
So extra scrutiny expected.
Absolutely. Approval is far from guaranteed. They need rock-solid data.
What stops another company just jumping in and making a similar drug? What are the hurdles, the barriers to entry?
Barriers in biotech are sky high. First, the cost and time for R&D are immense. Running a huge CVOT like PREVAIL, we're talking years and hundreds of millions of dollars.
Okay, yeah.
Then there's navigating the complex regulations, getting strong patents, figuring out complex manufacturing, and then, if you get approved, building a whole sales and marketing team. It's a massive undertaking.
So NAMS has already overcome some big hurdles getting to phase 3 and securing funding.
They have. But approval and commercialization are still major barriers ahead. If they do succeed, though, their positive data and their patents become barriers for anyone else trying to follow.
Despite the risks for any single company, the overall industry outlook is solid.
Yes, the sources generally agree on that. The cardiovascular space, because of that persistent need and demographic trends, has a strong long-term future. There's always room for better therapies.
Okay, let's circle back to that external risk you teased, the U.S. tariffs. What did the sources say about that?
Right. This is an interesting point flagged in the material. There's ongoing discussion, apparently, about the U.S. potentially imposing tariffs on pharmaceuticals imported from Europe.
And NewAmsterdam is based in Europe.
They are, based in the Netherlands. The reports mention potential tariffs could be as high as 25%. It seems like part of a potential push towards more U.S.-based manufacturing, but the details are uncertain, could change.
And if that happened, how would it hurt NAMS, assuming obicetrapib gets approved?
Well, if tariffs hit their finished drug or key ingredients coming into the U.S., it could significantly hike up their cost of goods sold for the American market.
Which means lower profits in the U.S.
Exactly. Lower profitability in what would be their most important market. It could also make pricing negotiations harder and might even push them towards setting up manufacturing in the U.S., which is really costly and takes a lot of time.
So it's this external sort of geopolitical risk hanging out there separate from the science.
Yeah, adds another layer of uncertainty beyond the usual clinical and regulatory risks. Definitely something to keep an eye on.
Okay, let's shift gears a bit and look at the people running the show. What about the management team at NewAmsterdam?
The sources highlight some key figures. The CEO, Dr. Michael Davidson. He's apparently a well-known expert in lipidology cholesterol, basically.
Got it.
And importantly, he's done this before. He founded and led two other cardiovascular biotechs, Omthera and Corvidia, and both were eventually bought out by bigger pharma companies. Successful exits.
That track record definitely matters in biotech. Suggests he knows how to build value.
It does. There's also a mention of his personal motivation, linked to his father's health, which adds a human element. The CFO, Ian Samaya, also brings strong biotech finance experience, including handling IPOs.
And the broader team?
Yeah, the sources mention the wider team includes people who've worked on past blockbuster cardiovascular drugs. So there's a depth of relevant industry experience there, which is crucial for navigating drug development and eventually maybe commercialization.
Have they faced any major crises at NAMS that the sources mentioned? How did they handle them?
Nothing specific detailed in the sources about a crisis within NewAmsterdam itself. But you could argue the CEO's experience, his quote about biotech not being for the faint of heart, suggests a certain resilience. And, you can almost see their decision to run that huge, expensive PREVAIL trial as a proactive response to the historical crisis of the CETP class itself. They're tackling the biggest hurdle head-on.
How open are they with information, communication, and transparency?
They seem to follow the standard playbook for a public company: press releases, SEC filings, investor conferences. What stands out positively is their commitment to getting data out there properly.
Like publishing in those top journals.
Exactly. Presenting at major medical meetings and publishing in places like NEJM and The Lancet simultaneously. That signals transparency and builds scientific trust. Holding an R&D day, like they did recently, is also a good sign of investor engagement.
Any red flags on the ethics front?
Nothing negative mentioned in the sources. Their mission statement sounds good, science-backed, and patient-focused. And like any company running trials, they operate under heavy regulatory oversight that includes ethical guidelines.
So, boiling it down, management seems honest, capable, and focused on shareholders.
Based on this material, honest seems fair, given the data transparency. Capable, yes, based on the track records and trial execution so far. Shareholder-oriented, likely they're public, they engage investors, and the CEO has a history of successful exits. But, shareholder value here is totally tied to future success, which is still uncertain.
Okay, let's follow the money. Capital allocation. Where are they putting their cash?
It's overwhelmingly going into R&D. Research and development, that's their core business right now. They spent nearly $45 million on R&D in just Q1 2025.
Wow.
That's funding PREVAIL, Rembrandt, Vincent, all those clinical activities, plus getting ready for a potential launch. It's where the money needs to go for a company like this, but yeah, it means they're burning through cash.
Are they using any of that cash to buy other companies? M&A activity?
Doesn't look like it. The sources don't suggest they're out shopping. If anything, given the CEO's history, the focus might be more on making NAMS an attractive acquisition target for a bigger company, assuming obicetrapib works out.
Right. Makes sense. And things like share buybacks or dividends?
Not happening.
Yeah.
Absolutely not applicable for a company at this stage, losing money while investing heavily in R&D. Investors here are looking for the stock price to go up if the drug succeeds, not for dividends.
What about metrics like return on invested capital, ROIC?
Also not really relevant right now. It would be negative since they're not profitable. The potential for future ROIC is what people are betting on. But given the huge R&D spend, they'd need blockbuster sales to generate a good return. And again, that CETP history highlights the risk that the invested capital might not pay off.
So assessing if they're using capital effectively, it really comes down to whether the trials succeed.
Pretty much. Right now, the money is going where it has to into these high-risk, high-reward clinical trials. Their big cash balance, that $808 million, gives them a good runway to do that.
Oh.
They themselves note they might need more funding later, but for now, they're funding the essential work. That Menarini licensing deal was also a smart way to bring in cash without selling more stock.
Okay, so that connects to their overall financial health. Beyond just where the money's going, how did the books look?
Well, the key metrics tell a story. Market cap, $2.26 billion, big expectations. PE ratio, negative, as expected for a pre-revenue biotech, so not useful right now.
And revenue was just that licensing money, not sales.
Right, $3 million in Q1 2025, not indicative of commercial traction. Profitability, definitely not profitable. They have significant operating losses driven by that R&D spend.
I saw their net law improved year over year in Q1.
It did. But the sources specifically point out that improvement was due to non-cash accounting things, like changes in the fair value of warrants, not because operations got better or cheaper. The underlying cash burn is still substantial.
What about debt? Are they loaded up with debt?
Likely very low debt. Based on their funding history, typically equity financing for biotechs like this and that big cash pile, their debt-to-equity ratio is probably minimal, which is good. Less financial risk that way.
And cash flow, you mentioned the burn rate.
Yeah, free cash flow is significantly negative. That cash burn was around $69 million operationally in Q1 2025, based on the figures. That $808 million in cash gives them, roughly estimating, maybe 10 to 12 quarters of runway at that rate, so maybe 2.5 to 3 years. But spending could change, of course. That burn rate is absolutely a key metric to watch.
So the bottom line on financials, loss-making, burning cash, but they do have a strong balance sheet because of all that cash.
Exactly. Not profitable now, maybe not for a while. But that $800+ million in cash provides crucial liquidity. It buys them time to run these expensive, essential trials. They're well-funded for the medium term, even with the caveat they might need more cash down the line.
All right, let's move into the second half of our deep dive. How is the market feeling about NewAmsterdam Pharma right now? What's the sentiment?
As of early June 2025, the vibes seem to be cautiously optimistic. The stock price was kind of hovering above its short-term average near its longer-term one. Technical indicators like RSI were neutral.
So anticipation, but maybe not outright euphoria.
Yeah, something like that. Suggests the market is watching, aware of the potential, but maybe waiting for more definitive news like the Prevail results.
But what about the professional analysts? Their view seems much stronger.
Oh, yeah. The analyst community is overwhelmingly positive, according to the sources. Really striking consensus. 10 buy ratings, 0 holds, 0 sells.
Wow. Unanimous buy ratings.
Pretty much. Consensus rating is strong buy. And the average price target they have is way up there, around 42, 43 $2. Compared to the $20-ish price mentioned, that implies like 111% upside potential.
Okay, 111% upside. That's huge optimism. But is there a risk when everyone agrees like that? Like groupthink?
That's exactly the risk. When sentiment is that one-sided and expectations are baked in so high, the stock becomes really vulnerable. If anything disappoints, especially those Prevail results, the correction could be sharp and painful because there's no counterbalancing skepticism.
What recent news might be feeding this positive view?
Well, things like attending investor conferences recently, reporting those Q1 results that showed trial progress and confirmed the strong cash position, and especially getting those Phase 3 results published in Annie-JM and The Lancet. Those publications are major validation points. The R&D day they held would also have played a role in communicating their story.
Okay, let's look inside the company itself. Who actually owns NewAmsterdam Pharma stock?
This is another really notable point. Ownership is incredibly concentrated among institutions. Like around 99% of the shares are held by big funds.
99%, that's unusually high.
Exceptionally high. And the sources note a net increase in institutional holdings recently, with some major firms adding significant positions. Importantly, several specialist biotech investors firms that really focus on this sector are among the top holders.
What does having specialist funds involved suggest?
It's often seen as a kind of implicit validation. These funds typically do very deep scientific and commercial due diligence before investing heavily. Their presence suggests they see real potential. But that concentration also means
That a few big players can really move the stock price.
exactly. Their buying or selling decisions can have a disproportionate impact. And the top four institutions alone hold almost 43% of the company. They have significant influence.
What about insiders? Management, board members?
The sources mention recent SEC filings, Form 4s and 144s, indicating insider activity around May-June 2025. A Form 4 shows actual buys or sells, while a Form 144 signals an intent to sell restricted stock.
Do we know if they were buying or selling?
The provided snippets didn't specify the details of those transactions, just that the filings occurred, so it's an area to watch. Insider selling needs careful interpretation. Is it planned diversification or a lack of confidence? With other details, we can't say.
And the company structure itself, corporate governance.
They're incorporated in the Netherlands, technically a Dutch N.V, and listed on NASDAQ as a foreign private issuer, or FPI.
FPI, does that mean anything different for governance?
It can.
Yeah.
FPIs sometimes follow different governance rules compared to U.S. companies. The full details would be in their big SEC filings, like the Form 20F annual report or the DF14A proxy statement. But again, that super high institutional ownership suggests the major investors have likely reviewed the structure and are comfortable with it.
Okay, let's try to pull all these threads together with a risk assessment. The sources included a SWOT analysis, strength, weaknesses, opportunities, threats.
Right, a good framework to summarize the internal pros and cons and the external landscape.
So what are the key strengths that jump out?
Well, the potential of obicetrapib itself, assuming it works. The experienced leadership team with that track record, the very strong cash position giving them runway, that huge institutional backing, the scientific credibility from publications, and the fact they're targeting a genuine unmet need in a massive market. Those are big positives.
And on the flip side, the weaknesses.
These are pretty significant too. The biggest is probably the single product dependency. Almost everything hinges on obicetrapib. They're pre-revenue and burning cash rapidly. They don't have their own history of commercializing a drug. They rely on third parties for manufacturing. And there's always that risk they might need to raise more money later.
Okay. What about the opportunities out there?
The sheer size of the cardiovascular market and that unmet need are the biggest opportunities. If that PREVAIL CVO data comes back positive, that could be truly transformative for the company. There's a chance to finally break the CETP class curse. The fixed-dose combo adds potential. That LPA angle could be a nice niche if Vincent works out. And of course, if they succeed, they become a potential acquisition target.
All right, now the threats. This is where the major risks lie.
Absolutely. Number one threat, highlighted everywhere, is clinical trial failure, specifically PREVAIL. If that data isn't good, it's likely game over or close to it. Tied to that is regulatory rejection or delays, even with good data, given the history. Intense competition from all those other drugs is a constant threat. The stigma of the CETP class could hurt adoption even if approved. Pricing and reimbursement pressures are always a factor in pharma. And then there's that external one.
The potential U.S. tariff.
Exactly. That's explicitly called out as a threat. It could squeeze margins in their most important market. Other threats include just general market acceptance challenges and broader economic downturns affecting funding or healthcare spending. But really, trial failure, regulatory hurdles, the class stigma, and those potential tariffs seem like the biggest clouds.
Okay, let's wrap this up. Synthesize the key takeaways and revisit that hook risk.
So summing up this deep dive based on the sources, NewAmsterdam Pharma is a very focused clinical stage biotech. Its fate is almost entirely linked to obicetrapib. They're not making money from sales yet, but they are well funded for now with a big cash cushion to run their critical trials.
And the market seems hopeful, maybe even very optimistic, especially analysts.
Yeah, sentiment is positive, driven by the drug's potential in that large market, the experienced team, and strong institutional support. But it's all contingent.
The future's very binary, isn't it? Hinges massively on that PREVAIL trial outcome and getting regulatory green lights.
Absolutely. It's a classic biotech binary event risk story.
And that specific non-clinical risk we teased at the beginning. Let's nail that down.
That was the potential for the U.S. to slap tariffs on pharmaceuticals coming in from Europe. Since NS is based there, this geopolitical economic uncertainty could directly hit their future profitability by raising costs in the critical U.S. market. It adds an extra layer of risk completely outside the lab.
So the final picture, a high-risk, potentially very high-reward biotech. Promising drug, real need, good team, plenty of cash for now.
But weighed against that really tough history for this drug class, fierce competition, high regulatory bars, and now this potential tariff issue potentially impacting U.S. profits. A lot of factors in play.
Definitely complex situation. Thanks for walking us through all that detail.
My pleasure. Lots to unpack there.
And if you, the listener, found this deep dive helpful, please do hit like and subscribe to the Stock Analytics AI channel. It really helps us keep doing these.
And don't forget, members get that perk euro $4.99 a month. Lets you suggest tickers for prioritized deep dives, especially around earnings time. Links are in the description.
Okay, before we sign off, one last thought for you to chew on. Considering the really difficult history of the CETP drug class and this potential tariff threat looming over U.S. profitability, does the potential differentiation of obicetrapib and that strong cash runway truly feel like enough to overcome those pretty big historical and external headwinds? How good would those prevail results need to be for you to feel confident?
Something to ponder as you do your own thinking and research.
Absolutely. And now, the necessary disclaimers.
Okay, so this deep dive is for informational purposes only. It is not financial advice. The content was generated by AI based on research material from early June 2025, and it's definitely not a recommendation to buy, sell, or hold any stock.
Investing in stocks, especially clinical stage biotechs like NAMS, carries significant risk. You could lose your entire investment. Remember, past performance doesn't guarantee future results.
Please conduct your own thorough research, do your own due diligence, and always consult with a qualified financial advisor before making any investment decisions. This information is based on the provided sources. We aimed for accuracy, but completeness isn't guaranteed.
And finally, this conversation included forward-looking statements. These involve risks and uncertainties. If things don't pan out as expected, actual results could be very different. Basically, anything that wasn't a statement of historical fact should be considered forward-looking.